Okay, so I believe you can already see my presentation. So I would just go straight into the topic of today. Okay, so I can see in the chats. Okay, so more people are dropping their chats now. So okay, yeah, I can hear you, sir. Okay, I can chat now. Okay, great, great. I can hear you now. Great. Thank you all. Thank you for joining today. So without wasting much time, um, we are going to go into the training for today. So we are actually focused on individuals and SMEs. So I know a lot of you have gotten, you would have gotten insights into what is going to apply for bigger companies. So, but today we are actually focusing on individuals and SMEs. So, what are we looking at today? So, basically, we'll be covering um, we'll be covering the overview of the new Nigeria Tax Reform Act. That is explaining to you what uh, the Tax Act is all about. We would also look at the key provisions impacting individuals and their implication. We would also look at the key provisions, right, impacting SMEs and the implications. And then we'll look at the issues arising. So many things already came up that we need to discuss. So we are going to check all of those, and then of course we're going to strategic insights for individuals and SMEs. So going into the overview of the new Nigeria Tax Reform Act, the reforms that were passed into law recently covers four major acts. So we have four major acts that were signed by the president into law in June 2025. So basically, you have the Nigerian Tax Act 2025, Nigerian Tax Act 2025, the Nigerian Tax Administration Act 2025, the Joint Revenue Board Establishment Act 2025, and the Nigerian Revenue Service Establishment Act 2025. So basically, the Nigerian Tax Act tries to consolidate all the Nigerian tax laws into one unified framework. So the act actually repealed existing acts that we used to have before. So we used to have the Company Income Tax Act, the Personal Income Tax Act, the Value Added Tax Act. We used to have the Capital Gains Tax Act, and some other tax acts, even including the Pioneer Status, the Industrial Development Tax Relief Tax Act. All of those acts are now consolidated into one working document, which is now called the Nigerian Tax Act. Then we have the Nigerian Tax Administration Act. So this also establishes a framework for managing tax compliance, revenue collection, and ensuring, and then also putting in place compliance framework. We have the Joint Revenue Board Establishment Act, which provides the basis for harmonizing and coordinating revenue administration, especially nationwide, dealing with the state internal revenue services. Then we have the Nigeria Revenue Service Establishment Act, which establishes a new Nigerian Revenue Service, which is supposed to replace, or sorry, which the FRS will transform into. So that is what we have at the moment. So okay, I'm trying to. Somebody is saying they can't see anything. Okay, all right. So please let me know in the comments if there is any, if at any point you stop hearing me or you stop seeing my screen. You can let me know in the comments. Okay, so moving forward, we are going to look at what are the objectives of the Nigerian Tax Reform Act. So the first objective is actually to consolidate the existing tax laws. So the Act seeks to consolidate the existing tax laws and then harmonize it into one singular tax law. The second objective is to actually enhance tax compliance and simplify tax processes. So it's also going to help encourage voluntary reporting and payments and eliminate tax evasion. Another objective is to actually raise revenue for public service and to help drive revenue growth for the government. The fourth objective is to actually modernize tax administration through digitization. All right, and then another objective is actually improve tax equity and then the last is to expand the tax base, which seems to be the most important of all of the objectives of the all of the tax act. Okay, so next we're now going into the key provisions affecting individuals. So I'm going to take that of individuals first, then we go into SMEs, and then we'll also take a look at what affects bigger companies, and then we'll probably go into the practical implications and what we have seen play out recently. All right, so okay, so profit or gains. So the first thing, the first one of the first most important thing that I've seen that has changed in the Personal Income Tax Act is the redefinition of what is actually taxable under the Personal Income Tax Act. So we've seen that digital assets are now included as part of incomes taxable under the Companies Income Tax Act. So this is actually in line with current trends. We see a lot of people make money from cryptocurrencies, digital assets, and all forms of coins and all of that. So this is now clearly capturing that type of income under the Personal Income Tax Act. So we see other things like prizes, winnings, honorarium, grants, award, laurels. They are now specifically listed as income taxable under the Companies Income Tax Act. Another change that is quite significant is the removal of the consolidated relief allowance. So in the past we used to have a consolidated relief allowance that individuals get to benefit from when benefit from right before computing the Personal Income Tax Act. That has been replaced with the rent relief allowance now, and the rent relief allowance is now the lower of 200,000 or 20% of annual rent paid. So this means that if you pay rent of say 1 million naira, right, 20% of 1 million naira is 200,000, so you get your 200,000 relief. So but immediately your rent goes over 1 million naira, say you pay 2 million, 5 million, it means the relief you only get is limited to 200 million. You cannot get 20% of your annual rent. And then if you also earn below 2 million naira, if you also pay rent below 1 million naira, it means you only get 20% of your annual rent. So you pay 800,000, you will get 20% of 800,000, which is about 160,000 naira as your rent relief. And of course, to get this relief, the law requires that you provide your rent agreement, and your rent receipt. So this to show that you actually incur that cost. So, but we'll see how this will play out in practice. Another change that has happened is that the tax band has been changed. So we have a new tax band now. The rates has increased. However, the base has also increased, right? So before we used to have base as low as 10,000 naira, 3,000 naira, 5,000 naira. So, but now we have 800,000, 2.2 million, and 9.9 million. So, what the committee that worked on this try to do is to ensure that people at the lower level do not pay more tax than they were paying in the past, right? So that is why for now minimum wage earners are able to still go through without paying any tax, so they are exempted from tax. So which means when their taxable income is 800,000 in a year, they would pay no tax at all. But remember, this is taxable income, not gross income. So what this means is that you would have taken out all the reliefs before arriving at this amount, all the reliefs and deductions before arriving at this amount. For self-employed people in business, or individuals who are running their own business and they are not in paid employment, it's a different ball game for them, because they would then need to factor in the cost. So for instance, if you make sales of, if you are a micro business owner and you make sales of say 3 million in a year, it is not expected that you would subject the whole 300 million to tax, right? So it's expected that you will take out all the costs you've incurred to make that income. For instance, you are a phone accessories dealer. then it means you bought those phone accessories. So you need to take out the cost of of purchasing the accessories from your income to arrive at a net position that you're supposed to submit to tax. Other expenses you incur for transportation, for your rent, for your store rent, your shop rent, all of that would also be deducted before subjecting the remaining to the new tax band. All right, so but you can see clearly from this that the highest tax band is 20. The highest tax band for pay for taxable income above 50 million is 25%. So this simply means that when your net income exceeds 50 million naira, when you have net million that is in excess of 50 million, then that excess is what will be subject to tax at 25%. So I hope that is clear. So if you look at this rate is still lower, quite lower than the rates that you find for companies. So for companies, the company's income tax rate is 30%, and there's another 4% tax that is payable. We'll get into that later on in this presentation. All right. Then the next thing on my list is the living accommodation for people who are in paid employment and the employer has given them accommodation to stay in. That now the benefit from that for that is now a maximum of 20% of the annual gross income from employment less rental value. So that's the benefit that is now available to people who are living in employer-owned accommodation. For non-resident people who employ Nigerians to work for them, now the mere giving employment offer to a Nigerian resident will no longer expose them to permanent establishment or significant economic presence. That used to be the case before under the old SCP order, which kind of subject them to personal income tax. All right. For small companies, the definition of small companies has now changed, and it is now companies with turnover of 50 million naira. Okay, I don't know, it's like my slides are not moving. Okay, your screen is not changing. Oh, sorry about that. I think I have to minimize this. Okay, so please confirm. Okay, all right, so sorry about that. Okay, so we'll continue now. Okay, all right, so I guess, okay, my screen, let me wait for it. Okay, so the definition of small company is now companies with gross turnover of 50 million naira or less, or 50 million naira or less, and then with total fixed assets not exceeding 250 million. And this does not apply to professional services firms and companies. So if you are into professional services and you are a company, then you will never become a small company. You never qualify to be a small company. So small companies are for companies in other line of business, and their gross turnover is 50 million naira or less, and their assets do not exceed 250 million naira. Then another change that has happened is that the introduction of the minimum effective tax rate of 15%, which will apply to companies who are a member of a multinational enterprise group and they have turnover of at least 750 million naira euros or its equivalent. So these companies, they are now going to be subject to 15% minimum effective tax rate. So once you're a member of an MNE with aggregate turnover of 750 million euros, then you are expected to pay effective minimum tax rate of 15%. This also applies to companies with turnover of 50 billion and above. So Nigerian companies with turnover of 50 billion and above, they will also have to apply the effective minimum tax rate. And then where a non-resident Nigerian subsidiary of a Nigerian company pays less than 50% effective tax rate in any jurisdiction it operates, the Nigerian parents must now pay top-up tax to meet that minimum 50% effective tax rate. So this aligns with the control foreign corporation rules, which prevents Nigerian companies from shifting profits to low tax jurisdiction. So this another major change that is affecting companies, right? So affecting companies in Nigeria. All right. Another change is affecting companies is relating to VAT. So now, when you buy an asset and you don't pay VAT on that asset, or you don't pay import duty when you import the asset, that asset will not qualify for capital allowance claim. So it's not a case of okay, it's only the custom duty that will not be considered. Now the entire cost would not even be considered for tax purposes. All right. Um, then donations, irrespective of the nature of the donation, it can no longer exceed 10% of profits before tax of any company, right? So this is another introduction. Even though even the donation is deductible, or irrespective of the nature of that donation, it cannot exceed 10% of your profits before tax. All right. Development levy. Development levy has also been introduced. So now we have a development level of 4% of accessible profits, and this is actually replacing what we used to have before as education tax, as what we have before as education tax, as Nigeria development tax level, NASEMI, police trust fund levies. So all of these levies has been consolidated into one, and we now have a flat rate of 4% on accessible profits. Okay. So moving quickly because of our time, I'll be talking about R&D. So another major change that has happened is that R&D costs cannot exceed 5% of turnover, right? So any amount above 5% will not be deductible for tax purposes. So any R&D cost that exceeds 5% of turnover is not going to be deductible for tax purposes. All right. Donations in respect of, okay, sorry, I've taken that before. Development levy, I've taken that as well before. Therefore, companies engaged in agricultural business, they are now exempt from companies income tax in the first 5 years of commencement of business, and this is outside the pioneer or the economic development incentive. So if you are into agri business, you do poultry, you do farming, you do crop production, um, all of those agri business in the first 5 years of commencement of business, you are not liable to companies income tax. You're actually exempted. All right. Moving on quickly, um, because I want also have enough time for questions and answers, so I'm moving so fast. So for expenses not incurred for the purpose of a trade or business, meaning you meaning what people call personal expenses or private expenses, right? So all those type of expenses, and expenses, they are not deductible, they will no longer be allowed for tax purposes. So if you incur any private expense and you think you can take it out from your business, it is no longer deductible for tax purposes, and you'll be able to deduct it. Also, for expenses that are supposed to be VATed, that's supposed to pay VAT on, if you don't pay VAT on those expenses, you will not also be allowed to deduct it for tax purposes. For imports, if you don't pay the import VAT, you will not be allowed to deduct that expense or that item for tax purposes. All right. And then lastly, for companies, you can now deduct all valid business expenses, including employee costs, stock loss, inventory damages, assets related to costs, pre-operational expenses. You cannot deduct all that without getting any approval from the FIRS. In the past, what used to happen is that for you to deduct this type of expenses, you need to obtain approvals from the FIRS. So, but with the new tax law now, is no longer required that you get any pre-approval. You can actually go ahead to deduct any expense that you have incurred for the purpose of generating your business. Okay, so all right, so let's moving quickly now into VAT, right? So looking at SMEs, right? So there is no more threshold for tax registration for VAT. So before, in the past, you must cross 25 million naira turnover before you are required to register for tax. So, but now there is that threshold has been taken off. So you are supposed to register for VAT immediately once you are making any sales or supplies as an SME. So this is another consideration for people who are moving from who are changing their business name um, to limited liability companies. So these are another consideration for you to look at. So once you are required to register for VAT immediately and start issuing VAT invoice. All right. So another thing to know is that all types of VAT that you incur now, whether you incur VAT on purchase of assets or for engaging for paying a service provider, all of those VAT are now qualify for input VAT claims. So in the past, VAT claims is limited to goods that you bought and you are reselling. That's the only VAT you could deduct in the past. Or you buy goods and use them for manufacturing. Those were the only two types of VAT that you could claim as input VAT before. And then in the telecom sector and some other service industry, the FIRS would actually allow some people to claim input VAT on services. So, but now it's not a clear provision of the VAT of the Nigerian Tax Act that all forms of VAT suffered by a company should now qualify for input VAT claims. All right. Another important information to note is that VAT is now due on the 14th day of the month following the month of transaction. That's starting from January 2026. So what we've been used to over the years is to actually pay VAT on or before 21st. So the only VAT we paid on the 14th was the one we withheld at source, right? So but now going forward, all forms of VAT that has been collected on behalf of government will now be paid on the 14th day of the following month. So I think this is fair because of course this is the amount, this is not your money, it's money that you've collected from customers and you have just held. So government has allow you hold it for 40 days, then it's good that you make payment of this amount on or before the 14th day of the month following the month of transaction. So now going forward, the penalties for failure to file VAT returns for taxable who are supposed to file VAT returns is 100,000 in the first month. So and then 50,000 for every subsequent month. So you can see this is steep increase in the rates for penalty. It used to be 5,000 before, so but you can see the jump to 50,000 naira. And then there's also a penalty of 5 million naira for awarding contracts to individuals or companies that are not registered for tax purposes. So if you engage a service provider or a supplier that is not registered for VAT going forward, you are going to pay a penalty of 5 million naira once the tax authority finds out. So it's not a matter of you did not charge me VAT, I self-accounted for the VAT. That will no longer fly again. So you cannot self-account for VAT again. So every supplier is supposed to actually issue a VAT invoice, and then you then pay the VAT over to the supplier or service provider for him to then remit to the tax authorities. And then FIRS is currently deploying technology to get access to taxpayers accounting system, right? So it started with the large companies. At some point it trickled down to even smaller businesses. So there's also a penalty for not allowing or not granting FIRS that access. So the penalty is also 5 million naira. All right. So okay. There are for capital gains tax, there are actually big changes, right? That can actually change the dynamics of investment for a lot of people. All right. So the first thing is that the rate was increased to 30%. So the capital gains tax was increased from 10% to 30%. That's a major shift. That's a huge increase in tax rates. And of course, there are already pushbacks and there are already comments about how this would affect the Nigerian stock market, which is beginning to gain traction, right? So people have said the timing of this increase is very wrong, and that this change is actually going to have a negative impact on the Nigerian stock market? Well, time will tell, and of course, the government is listening, and of course, I'm sure if there's a need to revisit this, it will be revisited in the shortest possible time. But the reason this was done is to actually align the capital gains tax rates with companies' income tax rates so that it's the same rate. And this is because of companies who actually trade. So some companies actually set up to trade in investment in all those investments as a financial instrument. So those companies buy and resell. So and then they pay tax on at 30%, right? So if they pay tax at 30% because they trade in shares, so why would those who are, because they are not set up as companies, engage in that business, but they also do the same business, so or they also do engage in the same trade, why should they pay lower tax? So but let's see how this plays out, and then with time we are monitoring this space and we're able to um, provide more insights on this as time proceeds. All right. Then the next thing is to notice that now the capital gains tax and now the definition of chargeable assets in the capital gains tax has been expanded. Now, so it now covers even very recent type of assets, digital assets and virtual assets. So your cryptocurrencies, your NFTs, they are now all chargeable to capital gains tax. So in the past, the law did not specifically cover it, and many of people took advantage of that. So, but now the law is now very specific and covers all of these type of incomes. All right. So the threshold for exemption from CGT for share disposals has been increased to 100 million. Has been increased from 100 million to 150 million. All right. So so this is a marginal increase. We would have expected more, so but it's okay. Um, and then and this applies to only chargeable gains not exceeding 10 million naira. So even if your gain even if you are within this threshold and the gain exceeds 10 million naira, it means CGT will still apply. And then when you reinvest formally, when you reinvest gains from shares that you have sold in other shares in a Nigerian company, you would get exemption from CGT. So but now that exemption has been removed, is no longer applicable. So it means for every sale, whether or not you invest in a Nigerian company directly, you will still need to pay capital gains tax. All right. So now you can deduct all incidental costs, right, that you incur in disposing an asset. So these are the only things you can deduct from your disposal proceed: incidental costs incurred in disposing the asset. All right. Moving on quickly, for assets owned by companies labeled startups, right, by angel investors and private equity funds, all those transactions, all disposals are now exempt from capital gains tax. Okay, and then capital gains tax will now apply where an individual disposes more than two motor vehicles used for private or non-profit purposes. All right, so this I've heard a lot of people on social media say that as a car dealer, that if you buy one car, if you are selling more than two cars in a year, that you pay CGT. So, but I don't know where they got that from. So, car dealers are set up as business engaged in purchase and sale of motor vehicles, and the law would not be set up to then say that a law would not be put in place then say when you sell more than two cars, you will be subject to tax. And it is clear here. It says for private or non-profit use. That is what the law says. If you charge CGT hat, so it's only if you are. So this is affecting actually private individuals, right? So I would say this is just trying to curtail the number of vehicles people sell in a year, or the number of vehicles people can drive, number of vehicles people can keep in their house. So now that makes me wonder: are we now operating in a socialist economy? So, but again, that is another talk for the day, another day. So, but the clear interpretation of this is that private individuals who are not into the trade of cars cannot sell more than two cars, and when they do that, they will pay CGT. It means they are rich and they will have money to pay capital gains tax. So this is not affecting car dealers who are in the business to make profit. All right. So moving away from that, assets acquired or disposed without any consideration are now considered gifts. and exempt from CGT. So meaning if your parents gift you a house or a friend gifts you a car, then that type of gift will no longer be subject to CGT. All right. Then moving away from that, chargeable gains for assets that have enjoyed capital allowance we now sorry chargeable gains of assets that have enjoyed capital allowance in the past. The gains will now be the sales proceeds, the difference to the sales proceeds and the tax incident value. That will be the basis for calculating the capital gains. In the past, it used to be sales proceeds minus acquisition cost. That's what we used to do in the past, even though those assets have enjoyed capital allowance. So, but it's now saying that if your assets have enjoyed capital allowance, then it means it is the sales, is the tax incident value that should be considered as the cost for the purpose of computing capital gains tax going forward. Okay, so moving to the next slide. All right, so I've talked about this before that the cost to be considered for capital gains tax is limited to the disposal proceeds, right? So of the assets is similar to what you also find for shares. So and then the market value of any asset is the applicable price of the assets on a sales conducted at arm's length or the open market rate. So let's just say the market value is what we use as the open market value is to be considered as the cost of any asset. So discounts will not be considered, and so any other cost different from market value will not be considered for tax purposes. All right. So for debts, shares, ships, aircraft, and incorporated property, they will now be deemed to be located in Nigeria. So for any transaction in any of these assets, they will be deemed to be located in Nigeria. And then gains accruing from indirect disposal of shares or interest in any asset is a chargeable gain, including non-resident. So if you do indirect transfer or the disposal of shares, maybe you own the shares through a proxy or through another company set up and all of that. Once it can be established that the gains is for a taxable person then that gain will be subject to tax even for non-residents. Okay. So moving away from that, there's Nigeria Tax Administration Act that has actually be strengthened to ensure that it's able to drive compliance, right? So a lot of penalties have been revised and the penalties have been increased significantly. So we spoke about a few of them before. So, but let me just go into let me just quickly run you through the applicable penalties. So for non-registration for tax purposes, you pay 15 million naira for the first month that you have not registered, and then subsequently you pay 25 million naira for every month that you fail to register for tax purposes. For when you fail to file, or you file and your returns you file is not correct, there's also a penalty of 100,000 naira in the first month of penalty, and then 50,000 for every other month following. When you sign contract with an unregistered vendor, as you engage somebody who does not have TIN, then you pay a 5 million naira penalty. When you also fail to notify the tax authority of a change of business address, for instance, you moved your business office to a different location and you refuse to inform the tax authorities, then you are going to pay a penalty of 100,000 in the first month and 45,000 naira for the subsequent month. When you fail to deduct tax, right, there's a penalty of 10% flat, and then interest at MPR rate, that's the monetary policy rate of the Central Bank of Nigeria. Then when you fail to grant access for deployment of technology, like what I explained before, you pay penalty of 1 million and then 10,000 naira for every day that you fail to give access to the tax authority. All right. And then when you fail to use the fiscalization system, the VAT fiscalization system that the FRA has launched, you also pay penalties of 200,000 naira plus interest at the monetary policy rate of the Central Bank of Nigeria. All right. Okay. So please be dropping your questions so that I would attend to them when we get to the Q&A session. So, but we are getting to the interesting part now, which is the issues arising. So there have been controversies around TIN, NIN, registration number, business number. Some people even said that if you don't have TIN, your bank account would be closed, from next year, from January. You won't have access to your bank account again. That is not true. So the requirement to give your TIN to the bank has always been there, and that requirement is for business owners, for business accounts. So if you operate a business account with any bank in Nigeria, they will typically request for your TIN. So that is not a new requirement, right? So and then also your name as a private person, you have your salary accounts or your private account with the bank, they will typically ask for your name. They will request for your name. So that is not a new requirement as well. The only thing that is new now is that at the back end, and that does not even involve us. You don't need to be involved. At the back end, the government tax authorities, the banks, they are going to link all of these numbers together. So they will link your TIN to your NIN, to your business registration number if you have a business. So that whichever number they use, it will bring out your tax records. That's the simple thing that is happening. So all this noise and misconfusion out there, I really don't understand where it's coming from, right? So but I'm sure people that are here now, you know better, and you can always explain better to people around you. All right. Then another thing is banks, insurance companies, stockbroking firms, and other financial institutions, they are now required to submit quarterly returns to the tax authorities. So meaning every quarter they will be submitting returns. And what returns are they submitting? They're submitting returns of people, individuals with transactions of above 25 million in that quarter, and then people with 100 million naira, for companies 100 million naira, for individuals 25 million naira, and it's cumulative. So meaning that every quarter they will submit new returns. They will submit returns of people with cumulative transactions of above 25 million for individuals and 100 million naira for companies. So what does this mean? If you are not compliant, the tax authorities would see the volume of transactions flowing into your bank account. So the best thing you can do is to be compliant, so that by the time they look at that record, they are saying for a company, they are seeing 100 million naira. Then they go to your account that you have submitted to them. If you're a corporate company, they want to see your VAT. They want to be able to see a relationship between that amount and what is in your VAT returns. Of course, your VAT returns do not show 100 million if 100 million is not your turnover. So, but at least it should be something reasonable. And then, even if it's not something reasonable, when they call you forward, when they call for your records, call for my audit or a debt review, you will be able to explain, because you have records of all of those transactions. You can explain and demonstrate to them how that 100 million naira is not turnover, and it is just amounts that went into your account and not turnover. So this means more companies will be called. More companies will be called for audits. More companies will be investigated. More companies will be debt review will be done for more companies, even individuals. So this is why it is very important to actually be compliant. Get your books ready. Get your house in order. If it's too much work for you, get a consultant to help you do it, right? To help you undo all of this, so that at every point in time, when the tax authorities comes calling, you are able to answer them and provide necessary explanations that then exonerates you from whatever alleged liability that they raise. All right. So I've already talked about this. Thing will be automatically linked to NIN, and for businesses to be linked to the registration number. That's what's happening going forward. All right. Then of course, so much controversies around taxes, and you need to upgrade your business name to limited liability company so that you don't pay excessive tax. Number one, even though tax is a good consideration, right, an important consideration when determining the structure you want to operate for your business. Personally, from my own review of these tax laws, this tax laws is not enough reason for you to change from business name to limited liability company if your turnover is still less than 100 million. That is my own position on this. So that is why for micro businesses have no business upgrading to limited company until the only reason why you can upgrade as a micro business, if you know that for sure you already have a contract coming ahead of you that will throw you up above 100 million, or you have plans to scale, you have an investor bringing in money and all of that. So those are the reasons, some of the reasons that could make you actually upgrade to limited liability company. If not, please stay small and just stay small and deal with the LIRS. So let me tell you, let me tell you the difference between business name and limited liability company. For a business name, of course, they tell you you are not separate from your business, that the business is not separate from the owner. Yes, that is true. The business is not separate from the owner, and all the incomes of the business is taxed in the hand of the owner because they are not separate. So the business is not taxed; it is the owner that will pay the tax for the business. All right. For a limited liability company, the company and the owner, they are two different people, right? Two different legal entities. So this means that the business will pay its own tax, and then the business owner will pay his own or her own tax separately. For a business name, if there's any, in the case of any business failure and you have creditors that you are supposed to settle, those creditors can actually take over your personal assets, right? They can take over your personal assets. They can take over the assets of even your partner, your spouse. They can take it over. But for company, it is limited to the shares, so you are kind of you are not exposed to all of those exposure that applies under the business name, right? For when you want to get access to finance as a business name, because you're a small micro business, you will not get commercial loans. You will not get loans from commercial banks, but you would get grants and finance from government. So government have special funds. There are also some NGOs, agencies that give out special funds. You will get all of that. So, but of course, you will not get a commercial bank loan and all of that. Your compliance cost will be low because you don't need to file annual returns. You don't need to prepare. You don't need to file annual returns. Annual returns. What I mean here is returns to the companies to the FIRS. You don't need to file that. You don't need to prepare audited accounts, right? And there are so many other things you don't need to do, right? You don't need to have a board set up. You don't need to have directors sitting on your pin, sitting allowance. You don't need to put in some corporate governance structures that may also cost you more because the business is small and nimble, right? And then for business things, you are typically operating in the formal sector, right? So if people see that you're in the formal sector, which is reality, you are in the formal sector as a business name. Where for companies are seen as properly structured in the formal sector. So I talked about the tax rate already. For business name, your tax rate, the highest band is 25% of income above 50 million. For companies, it's either you are small and you're paying 0% or you pay 30%. When you cross 50 million naira threshold, you start paying 30%, and then you pay development levy of 4% as well. So despite all of this, right, all of the advantages of limited company and the disadvantages of business name, I still stand my position and I say that the only time you should consider upgrading is when you're expanding your operations or when you are seeking for new investors. When your annual turnover exceeds 100 million, yes, you can upgrade. When there's a need to comply with regulatory requirements, like there are some businesses that cannot operate as a business name, you must register a limited liability company. Then of course you need to upgrade. And then when you get to the point where you need to separate your personal and business risk, right? Maybe the risk you think the business has too much risk, financial risks or reputational risks, and you want to separate yourself clearly from that risk, then it's fine. You can go ahead to do an upgrade. All right. So again, for micro businesses, you have no business upgrading. Based on SMEDAN, micro businesses are companies with turnover of below 25 million naira in a year. That's based on SMEDAN. SMEDAN is the Small and Medium Scale Enterprises Development Agency of Nigeria. That's the agency that looks out for the interest of MSMEs, micro, small, and medium scale enterprises, right? Then another thing is that another point. Yeah, so SMEDAN, based on SMEDAN, you are a micro business, you are 25 million naira and below. Then from the statistics done by SMEDAN, out of all of the SMEs we have in Nigeria, only 2% are actually MSMEs. So 98% is are micro businesses. So it means a lot of business owners are actually micro businesses and they have no business upgrading to limited company. Okay. All right, so I wouldn't dwell so much on this. I don't think it affects a lot of us here. So this is the pioneer. So the pioneer incentive scheme is has been abolished, and we're having a new economic development incentive scheme. So from my personal review, the EDI has taken away a lot of incentives, and the EDI is actually I don't know. I'm not sure so many businesses can benefit from this, because even looking at the capital threshold, it's quite humongous. So we have threshold of as high as 500 billion naira. That's that's I don't even know how much is Dangote refinery. Please let me know in the comments. So because this is humongous, I don't know how many companies have capital investments of 500 billion naira. It's only the people in Dangote League that will be doing this, Dangote, Bua, and the likes. So this looks like something a lot of people will not benefit from. So, but I know there are talks internally within the agencies to see how they can come up with policy regulations to actually specify workable rates across various industries that the EDI applies to, right? So, and I know as time goes on, those circulars or regulations or whatever it is will be made public, and then people would be able to benefit from the EDI. Apart from that, they relieve for under the EDI, you will now be paying company's income tax at 30%. The only benefit is that you are getting a tax credit of 5% of the capital investment every year, and you're getting that for 5 years only. All right, so but you can do additional 5 years if you are able to reinvest all your profits, all 100% profits into the business. That means your shareholders will wait for 10 years, or sorry, rather 5 years. You wait for 5 years, then when you get the extension, you can now distribute dividends to them. All right, so so I don't want to dwell so much on this. Let's move on to the next slide. All right, so for individuals and SMEs, I would say um, compliance is a strategy now. So people will say, I don't just want to comply. I want to yes, you will plan. Tax planning is important as well, but so also is compliance, right? So you plan ahead, and then ensure you comply going forward. Then you have to implement cloud accounting. There's no story around this. You can't be doing paper accounting again in this age and time. Even as a micro business, there are there are a few, okay, don't let me say many, there are a few cloud accounting platforms out there that are totally free, 100% free, and you can generate invoices, you can integrate with your bank account, you can do bank reconciliation, all of this free on some of these accounting platforms. Zoho is one of them. Zoho is not here. Zoho, you can use Zoho, and there are some off-shelves account. Okay, Zoho is actually, there are some off-shelves applications you can also use, right, that are completely free. So for bigger businesses, you can get paid applications that gives you access to more functionalities, right? And then another thing is cash flow. Cash flow is very important. You need to ensure you are managing your cash flow properly. So because when you are supposed to pay tax, the tax man is not going to wait that there is no money. So you need to make available funds to actually fulfill your obligations. All right. Then your structuring. So like I mentioned initially, ensure you are adopting the right structure. So and that should also put in consideration your current size, right? So you consider your current size, then check for tax efficiency, CGT efficiency. All right. Then take advantage of all available incentives for those that can access EDI. Please take advantage of it. There are also other incentives. For instance, those who now give business in the first 5 years of commencement, you are exempt from tax. Know those exemptions and take advantage of them. I don't expect that you'll be able to read the tax laws and pick at all these things, but it's good to get a tax consultant to actually put you in the right direction. All right. So So for individuals who want to maximize their wealth, the first important thing is that you separate your personal business from your business finances. So personal finances, separate it from your business finances, and all your investments, structure them properly. Get the right information so that you know the right type of investments to go into. Recently, FIRS released a withholding tax, a public notice that they want to start a forced withholding tax on short-term securities. So you should have this type of information with you so that you also informed your decision on the type of investment you make. All right. Then you also need to do internally. You need to check yourself. So you need to conduct health checks, right? To check your records. Do at least 6 years, because when any tax authority comes for audit, they will typically do 6 years audit. The law allows them to audit you for the last 6 years. So get somebody to help you check your records, check your system, check your bank statements, and all of that, and see the exposure you have. And even if there's no exposure, let's get that comfort that there's no exposure. And if there's exposure, let the person show it to you. We have worst case scenario, best case scenario, a moderate case scenario. We can come up with all of that so that you know where to play. So of course, the tax authorities cannot see everything when they come for audit. So, but your consultant can pick out everything for you, let you know what the worst case scenario is, and then also let you know what the best case scenario is, so that you are prepared and you can actually make provisions for those exposure. Even so, that if they crystallize, it doesn't become too material. It doesn't affect your business significantly. All right. So, um, tax going forward, tax will be a top priority in every leadership meeting, every board meeting, every management meeting. You should actually consider tax as a priority issue. Remember, tax is the second highest revenue generator for the government after oil. So this, and government actually wants to grow non-oil revenue. And when they say they want to grow non-oil revenue, you know what they are talking about is taxation. There is no other thing. As in, you know that the mining sector, nobody is looking at extractive industry. Nobody is trying to grow them, and most of the investment and whatever is happening in that space is actually being done illegally and all of that. So it's not. So government does not get its own share from that space. So speak about any other space. So, but tax is easy to collect, it's easy to enforce, and that is why government is looking at that direction. And most Western countries actually live on tax. So tax is a viable source of revenue for government. So that's the same way companies, businesses should also take tax seriously going forward, so that you don't run into problems with the tax authorities. So yeah. So moving on to so now we can now take questions and answer. So now I'll be looking at your questions in the comments, and then I'll be answering them. Thank you for staying this long. So thank you for staying with me. Yeah. So okay. So let's see. Taiwo says we have to lead by example. Small turnover notwithstanding, people are sure we have to pay tax any which way. Yes, yes, yes. So for professional services firm, yeah, okay, yeah. For professional services firm, we are still going to pay tax. So because the chairman of the committee has said that professional services firm should lead by example. Whether so there's nothing like small business professional services firm, they are still required to comply fully like the large companies, even if their turnover is below that of a small business. So they still need to comply fully. They still need to do their monthly VAT returns. They need to withhold tax. They need to file their personal income tax returns at the end of the year. Okay, all right. So I can't see another question. Yeah. Okay, so does it mean the session is quite okay? All right. Okay, so all right. So in the absence, okay. Okay, let me see. Let me see if I have questions in the other room. Okay. 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 All right. So All right. So I believe the last 1 hour has been a fruitful one. So, but before we go ahead, I would, of course, as we proceed, you can drop your questions. Then I want to quickly talk about Primo Consulting. Primo Consulting um, is a firm that is the brain behind this session. So the Primo Academy is a arm of Primo Consulting, which I've put together this section this morning. So Primo Consulting is basically a boutique tax firm. So we are a boutique tax firm. So what we do, we actually provide tax services, we provide regulatory services, and we provide advisory services. So we actually are focused on helping individuals and SMEs achieve optimal financial performance. So talk about tax, talk about accounting, talk about regulatory affairs. We are here to provide uh, the support. Okay, so there's a question here. Let me take that quickly. Uh, if your parent gives you a landed property and you sell it, are you now exempt from CGT? Yes, so any asset you get by way of gift is now exempt from capital gains tax. So that is the new position of the law. So any asset you get by way of gift is now exempt from capital gains tax. All right, so I hope that answers your question. So yeah, so okay, so all right, so okay, so but why should you choose Primo Consulting? Um, we actually have five five strong pillars upon which we operate in Primo Consulting. One is our technical expertise. We are known in the industry for our technical depth and our technical excellence. We have successfully helped several SMEs and even large companies in resolving their tax, advisory, regulatory issues. And we've been doing that for um, quite a number of years now, right? We have a track record with the Big Four. We've also worked with other um, firms within the top 10 brackets in the industry globally. So so Primo Consulting has that technical expertise to deliver your service specialized and technical services to you. We also provide personalized services, so we stay close to our clients. We understand your business, we understand your unique business needs, and we provide bespoke solutions to you. We also ensure that we provide strategic advice that can actually bring about business transformation. We are very agile, we are flexible, we we adapt quickly to changes. So when there's a change in your industry or your business, we are first to know, and we are able to advise you quickly. All right. Of course, we don't have any bureaucracy. We are a tax only firm. We don't do statutory audits, so we don't have that independence issues. So we are able to take on engagement swiftly and render required services to our clients fully. All right. So we also offer innovative solutions. We bring on board fresh perspectives. We don't follow the crowd. We don't follow the crowd. We actually we are deep thinkers, right? We are deep thinkers. We analyze issues properly, and we consider statistical information gotten from the right sources, and we employ all of that in advising our clients and taking and designing strategies and insights that helps our clients and improve their businesses. All right. So just going to our service offerings, we provide tax services like I explained before. We do personal income tax compliance, so we can help individuals, SMEs, and even companies with personal income tax compliance of their employees. All right. We also specialize in company income tax compliance. We help with VAT and withholding tax compliance. We provide transfer pricing services. We support during tax audits and investigations. We provide tax opinion. We also help with payroll management, right? We do tax due diligence, mergers and acquisition support, and we provide health check and risk assessment to our clients. Under our advisory services group, we provide financial accounting services and financial accounting advisory services. We provide these advisory services. We help startups and SMEs. We provide advisory opinions to them. We help with recruitment and outsourcing, and we also provide training and capacity development services, just like we are doing this morning. All right, and then on the regulatory arm, we help with CAC registration. We help to file annual returns and other post-incorporation services. We provide all of that. We help to get compliance certificates like TCC, PENCOM certificates, COMO, DPR, NSITF, ITF, VPP certification. All of these and many more we help our clients to process. We provide company secretarial services, business support services, and then we help process certificate of acceptance of fixed assets. All right, so I am the lead partner at Primo Consulting. I'm speaking with you, Olufunsola Ojo, Samuel FC ACTI. I'm a fellow of the Institute of Chartered Accountants of Nigeria. I'm also a fellow of the Chartered Institute of Association of Nigeria. I also have a practicing license issued by the Chartered Institute of Association of Nigeria to practice as a licensed chartered tax practitioner in Nigeria. So I possess a BSc from Olabisi Onabanjo University and a diploma in accounting. Talking about my professional experience, I started working at Deloitte in 2011. That's where I trained and I grew to become an assistant manager. I left in 2018 to join Anderson as one of the pioneer managers. And then I moved on to Forbes Mazar, where I helped to stabilize the tax services unit, right? And then I went back to Deloitte, spent about a year before joining Primo Consulting in 2023. So I currently also work with a big conglomerate in Nigeria, StarTimes, where I'm the Star Director and Head of Tax and Financial Reporting. So I'm able to. So currently I provide tax services. I provide advice setup opinion. I help with monthly and annual tax compliance, payroll management, tax due diligence, regulatory services. All of these are the type of services I can help you with if need be. I also write. I write a lot. I write a lot on tax. I write a lot on finance. I speak a lot on tax and finance as well. I've appeared on TV interviews, radio interviews, and even on social media. I've also facilitated training like this for FIRS, LIRS, Lagos Internal Revenue Service, and some other government agencies. All right, so thank you for staying with us. So far, it's been a good session with you. I'm checking again to see if we have any other question. So, but I can't see any other question here. So I know this topic has been out there for a long time. So, but if you need, you can also reach out to me privately. So this is my phone number and that's my email address. So you can reach out to me privately with your questions if you don't want to drop it in the comments here, and then I'll be glad to provide answers to you and to help you with any issue at all that you might have. Alright, so at this point I think it is a good time to call it a day, right? Except there are questions, right? Except I see any question in the comments that requires an answer. So, but in the absence of that, I think we can call it a day here. Thank you for staying with us. I can say that it's been an engaging session, and of course, what we have discussed today is quite technical. So you can reach out to me after the session if you have any question whatsoever, and you can do that by using my phone number or our email address. So thank you again for staying with us this far, for staying with us It's over 1 hour, and I think we would end this session on a good note at the top of, okay, you can do at 11:15. We are ending this session now. Thank you very much. Thank you.